All right. Hello, everyone. Thank you for logging in. I hope you all are having a good day so far. My name is Haley Campbell, and I'm the Community Engagement Representative with We Florida Financial. Taking Pride in Homeownership is the fifth webinar of our monthly series, and I'm super happy to have you on here joining us. For National LGBTQ Pride Month, we're going to talk about taking pride in homeownership and learn about the pathway to ownership, renting versus buying, home loans, and more. This is going to be an informative webinar, and I'll be providing my contact information in case you have any questions or feedback following the webinar. Well, let's begin. So happy LGBTQ Pride Month. My contact information is listed on the screen. My email is hcampbell@wefloridafinancial.com, and my work cell phone number is 954-871-7525. Our webinar agenda today is going to be the following topics. Welcome to your credit union. Are you ready to buy a home? 10 steps to buying a home, loans, getting pre-approved for a mortgage, finding a real estate agent, making an offer and getting a mortgage, last steps before closing, closing and saving. We have fun financial tips. We care about your financial literacy, and then how to join We. Welcome to your credit union. So to give you a little background on our credit union, We Florida Financial is a full service credit union that's been providing outstanding customer service since 1952. So this year we're actually celebrating our 70th year of being open. We're not for profit, so every member is a shareholder of We Florida Financial. When you deposit money into our credit union account, you become both a customer and an owner. We offer low fees and high savings rates, and we also offer a range of loans, including auto, personal, home, aviation loans, and more, which have low interest rates as well. So are you ready to buy a home? Before deciding to buy a home, it's beneficial to weigh your pros and cons on renting versus buying. Renting offers flexibility, predictable monthly expenses, and someone to handle repairs. Homeownership also has benefits such as giving you a sense of stability and pride of ownership, along with tax deductions and equity. If you decide homeownership is the route you want to pursue, it's important to determine your readiness. As a first-time homebuyer, the process can seem scary and intimidating, so it's important to have everything in order before taking the big step. Careful planning and preparation can help make the process run smoothly for you, and in doing so, it's important to take some time to answer the following questions. So why do you want to become a homeowner? How long have you been considering buying a house? Do you have a stable source of income? How long do you plan on living in the area? Have you looked at home prices in the area? How much have you set aside for a down payment? Are you prepared to take on home repairs and maintenance? Are you familiar with the finance options available to you? How much are closing costs? How will you furnish and decorate? What are the neighborhoods and schools like where you want to live? And then if you've been browsing and have some houses you might be interested in, maybe try to find out how old are the roof and appliances of the house you're interested in, and how many days has the house been on the market for. Those are important things to look for and think about. If you answer these questions and feel ready to buy a home, we will move on to how to get the process started. So 10 steps to buying a home. Buying a home can be a lengthy process, but I'm going to try to break it down into 10 main steps. So first you would check your credit score. You then would determine how much you can afford. Then you would choose a lender and get pre-approved for a mortgage. You'd then find a real estate agent and start the home search process. Once you find a home you're interested in and that you want, you'd make an offer. You would then get a home inspection and home appraisal. Then you would purchase homeowners insurance, do a final walkthrough, and then close on your new home. It's also helpful to make a wish list to help you figure out what you want or need in a home, such as what your must-haves are versus what you're willing to negotiate on. I've included a sample wish list on this slide for reference. So it has a column for must-haves and then a column for nice-to-haves, such as like a gym in the neighborhood, a pool, storage, balcony, etc. Loans. So a loan is when money is given to another party in exchange for repayment of the loan principal amount plus interest. We Florida Financial offers a range of loans with low interest rates, such as home, mortgage, HELOC, and more. To find the right mortgage for you, the type of mortgage you use to buy a house affects what you'll need to qualify for the loan, including the required down payment amount and how you'll pay it back. Choosing the right home loan can boost your chances of approval and may save you thousands in the long run. Before you decide which type of mortgage to pursue, it's important to learn the pros and cons of each one. So I'm going to talk about some of the main type of mortgage loans. So conventional loans are mortgages that are not guaranteed by the federal government. They offer low minimum down payments, but have more stringent qualifications. FHA loans are mortgages backed by the Federal Housing Administration. These are generally easier to qualify for than conventional loans, but have stricter requirements for mortgage insurance. VA loans from the Department of Veteran Affairs are for active or former service members and eligible spouses. So VA purchase loans allow you to make no down payment for anyone that is a veteran. Jumbo loans are mortgages for houses that are more expensive than standard lending limits. These usually require larger down payments and higher credit scores. Renovation loans let you wrap the cost of home improvements into the total amount of the home loan. Especially when mortgage rates are low, this can be a way to borrow more money for repairs while paying less interest than you would with another type of home improvement loan, like a personal loan. With each of these loan types, you may have the opportunity to choose between a fixed rate or an adjustable rate mortgage. As you probably guessed from the names, fixed rates are static and adjustable rates can move up or down. You'll also need to choose the mortgage term. Typically 30-year mortgages are the most common, but there's also 10, 15, or 20-year terms that you can do as well. Some tips regarding loans would be definitely gather knowledge on lenders and always take a loan from a credible financial institution. Check your credit reports. Your credit score and credit history are major determinants in the interest rate you receive on a loan. Always make your loan payment on time and try to pay more than your minimum. And paying off your mortgage early is a good way to free up monthly cash flow and pay less in interest. Getting pre-approved for a mortgage. So a mortgage lender is a financial institution or organization that loans out money for real estate purchases. A mortgage pre-approval is an offer by a lender to loan you a certain amount under specific terms. The offer expires after a certain time period, such as 90 days. So if you've come to the point where you know your home buying budget, you've decided what type of loan will work for you, then it'd now be the time to start shopping for a mortgage lender. When you're looking at lenders, determining that they offer the type of loan you want is probably the first step. You'll also want to look at how their sample rates compare with today's mortgage rates, find out what closing costs you'll be responsible for, and compare mortgage origination fees. You can typically find some of this information right on lenders' websites, but to get some actual numbers, you'd most likely have to speak with a loan officer on the phone. Working with a lender to get pre-approved for a mortgage is an important step in accurately determining your budget. A mortgage pre-approval will give you real numbers since the lender will have detailed information about your finances. This includes a hard inquiry, which will show up on your credit report. But the good news is if you apply with multiple lenders around the same time, it'll only count as one hard pull on your report. So if you're, applying with multiple lenders around the same time, it'll only count once as a hard inquiry. So that's positive. Pulling together all the documents for a pre-approval can be time consuming, but it's worth it. Along with the pre-approval letter stating how much the lender is willing to lend you, you can also get a loan estimate form. This form isn't final, but it lets you compare lenders' rates, fees, and other costs since they all use the same form. A pre-approval letter is typically valid for 60 to 90 days. A pre-approval letter also shows sellers and real estate agents that you're a serious buyer who can get financing, which can give you an advantage over competing people who are also home shopping. Florida Financial has low interest rates on mortgage loans. So if you're interested in applying for a mortgage loan with us or finding out more information, you can call 954-754-2400, and then you would click option 4. Finding a real estate agent. A real estate agent is a licensed professional who represents buyers or sellers in real estate transactions. If you have your pre-approval in hand and know what type of house you're looking for, now you can find someone to help you actually look for the homes. The right real estate agent can make a huge difference throughout the process of buying a house, from knowing the ins and outs of the market to providing support to helping you negotiate with the seller. It's a good idea to interview at least 2 to 3 agents. You can ask people who have recently bought a home if they'd recommend their agent, because you definitely want an agent who will advocate and negotiate on your behalf. The buyer's agent is generally paid a commission by the sellers, so while you'll sign a representation agreement with the real estate agent, you won't be responsible for actually directly paying them. Kevin Friedman with Flobella Realty is a great option for a realtor in South Florida. To contact him, you can email him at kevin@flobellarealty.com, or you can call him at 954-326-3147. Making an offer and getting a mortgage. So once you find a home you want, it's time to make an offer. Your real estate agent can be a huge resource here, providing you with sales information and intel. Once you make the offer, the seller reviews it and they may accept, counter, or decline it. If it's accepted, you'll apply for a mortgage and begin the closing process. If the seller rejects your offer, you might make a counter offer or walk away. Just depends on why they turned you down. If the seller counters, you can talk it out with your real estate agent to decide whether to accept or make your own counter offer. However, if the seller does accept your offer, then congratulations, you'd only have a few more steps to go. You'll also likely write your first check at this point. Earnest money is a deposit you'll make toward the purchase of the house. It usually goes into an escrow account, and when the sale goes through, most buyers use it as a part of their cash to close. Also, now that you know the property you want to buy and how much you'll have to pay for it, you'll need to choose a lender to get a mortgage from. You can go with a lender that pre-approved you or start with a different one. It's totally up to you. This is also a paperwork heavy process, so I wanted to talk about some of the documents and things you will most likely need. W-2 forms from the past 2 years. There might possibly ask for more if you've changed employers. Pay stubs from the past 30 to 60 days. Proof of other sources of income, including documentation of any gift money. Federal income tax returns from the past 2 years. Recent bank statements, usually from the last couple of months. details on long-term debts like car or student loans, and your ID and social security number. Once your mortgage application is complete, you'll go into underwriting. During this process, the lender makes a final decision on whether to give you the loan. Underwriting includes digging deep into your finances, so you may need to come up with even more documents. The lender will also look at the home you've chosen via an appraisal and may request a title search. Last steps before closing. So you would then get homeowners insurance. It might feel kind of strange to take out an insurance policy on a home you don't actually own yet, but most lenders make securing homeowners insurance a condition of giving you a mortgage. You'll want enough coverage to fully replace the home, which might not be the same as your purchase price or the appraised value, and typically the policy should become effective on your closing date. You then want to schedule a home inspection. A basic home inspection could raise issues you might face down the road and point out any necessary repairs. This inspection covers all aspects of the house from the foundation to the roof of the home. If you have a particular concern like mold or water damage or anything like that, you may want to get one of the more specialized types of home inspections in addition to a standard inspection. You don't have to, but it's typically a good idea. You then choose the home inspector and pay for the home inspection. If it uncovers any problems that weren't included in the seller's disclosures, you may be able to negotiate with the seller. You would then have the home appraised. The home appraisal is completely separate from the home inspection. While the home inspection is for your peace of mind, the appraisal is really for the lender, which doesn't want to lend you more money than the home is actually worth. An appraisal looks closely at the home you're buying and at comparable recently sold homes to determine the market value of the property. Your lender will choose the appraiser, but you'll pay for the actual appraisal. Even if you're buying a house with cash, you may want to consider hiring an appraiser yourself to be sure about your investment. You would then negotiate any repairs with the seller. Though some things like prorating property taxes or HOA fees will already have been addressed in your offer letter, you may still have some things you want to negotiate before closing. Your ability to negotiate can hinge on what kind of market you're facing. In a strong seller's market, it can be difficult to get consent since the seller can simply go to their next offer. But if it's an issue that will come up with any buyer, for example, a necessary repair that will get flagged by any home inspector, you may still have leverage. Closing and saving. So after all of this, you would have finally made it to the last step. Getting familiar with the standard closing documents ahead of time can make the closing a smooth process. Your lender must provide you with the closing disclosure at least 3 days before the actual closing. You can compare it with your loan estimate to see whether and how any closing costs have changed. This will let you know how much total cash you'll need to actually close. On or close to closing day, you'll do a final walkthrough with your realtor to make sure that everything's as agreed upon. For example, all the appliances that are supposed to be included in the sale are still there, etc. After this, you're now getting the keys to your new home. Once you've moved in, it's important to maintain your home and keep saving. If your home is going to eventually be worth more than you paid for it, it's important for you to take care of the property. Damage to the property can end up depreciating the value of the house and can result in you actually losing money. These insurance policies can provide you with the necessary money to make repairs should your home be subject to fire, flood, or any number of things that can cause damage. Having homeowners insurance is crucial. It helps ensure that if something happens to your home, you'll not end up in a financial bind. It's a good idea to speak with an insurance agent near you about insuring your home as soon as you can. Then after this, it will be time to enjoy your new home and continue to save. We have fun financial tips. We Florida Financial is partnered with Zogo to provide you with a gamified financial literacy app that teaches everything from opening a bank account to saving for retirement. You can win rewards for completing financial literacy lessons on saving, spending, and managing your money. If you're looking for ways to further your education, Zogo is a free app that teaches you about finance and pays you to learn. You can download Zogo in the App Store and use code WeFlorida to sign up. We Florida Financial is partnered with Consolidated Credit and Coffee to help you and your family get financially fit. They host free webinars on a range of topics regarding financial literacy the second Wednesday of each month. To register, you can check out their website that is on this slide, and you would use our code, which is WeFlorida, in order to sign up. We Florida Financial is also going to continue to host free monthly webinars on topics regarding financial literacy. To register, you would use the website that is on this slide. And our next webinar is going to be on July 20th, which will be on back to school budgeting. How to join We. So how much does it cost to join? There is no fee. You simply open your savings account with a minimum of a $5 deposit, and this represents your share of credit union ownership. As long as you have that $5 on deposit, you're eligible to benefit from any credit union service, including applying for loans, mortgages, and more. You have to live or work in one of our 46 Florida counties, including Broward, Miami-Dade, and West Palm Beach. You can be a family member of an existing member, and you can apply online at wefloridafinancial.com or at any of our branch locations. Here we have all of our social media handles. We're on Facebook, Twitter, LinkedIn, YouTube, Instagram, and TikTok. All of them are We Florida Financial, except Twitter is WeFL Financial. If you want to follow us for updates, events we have going on, promotions we're running, etc. If you have any questions or feedback, you can email me at hcampbell@wefloridafinancial.com. And if you want a free $25 on us, you can sign up at wefloridafinancial.com and enter the promotional code community25 when it asks how you heard about us to get a free $25 on us. So we will be running that promotion for a while. Just use community25 as your code, and you will get the money after having an account open with us for 90 days. So we've come to the end of our Taking Pride in Homeownership webinar. Thank you so much for taking your time to log on and learn about the home buying process. Feel free to email or call me if you have any questions regarding the presentation, mortgage loans, or about We Florida Financial. Thank you so much and have a great rest of your day. Happy Pride Month.